Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Tuesday, July 9th, about 6 a.m. Central Time. All right, the precious metals are higher after yesterday's profit taking, which turned into stop loss selling, and the result was about a 2.5% correction in the silver market. At one point, it was down about 90 cents. As the bargain hunters started to come back in, it recaptured many of those losses. And then on the gold market, it was down about 1.3%. At its lowest level, it was down about $32 to $35. Gold, as of this recording, up about $4.50. Silver up about 40 cents, which is a 1.3% rise. Now let's talk strategy for a moment on how I approach these markets. So when you start off with a bounce and you have a 2-day rally like that, you get the one big correction and then you get the snapback rally. It gives you a clearly identifiable level as a backdrop to trail stops, manage risk, and then also identify the breakout level. So like on gold, the breakout level would be 2400. On silver, the breakout level would be that July 5th high, which is going to be 3179. So for example, someone could test the waters on a market like gold or silver at these levels and then manage the risk below that July 5th low. You'd wait for a thrust up above something like 2400, above 3179 before adding to the position. Once the breakout is achieved, you adjust your risk management to accommodate the two positions and the new positions. That's how I operate. Now, every person's going to have their own strategy, their own risk parameters, and I like to use those mini and micro contracts for sticking a toe in the water. We don't want to just jump off a cliff into the deep end of the swimming pool. We don't even know how deep it is. Now, today, let's look at the economic calendar. We are going to have one real important data point here, and it's going to be Jerome Powell. So it's a moving target. It's not just a number here. He's going to kick off his semi-annual monetary policy report to Congress before appearing before the Senate Committee Banking at 9 a.m. Central. The testimony generally has two parts. He reads a prepared statement. A text version will come on. That's how the market makes this immediate movement the second that he sits down at the podium. People are like, the guy says good morning, and all of a sudden gold makes a big move. If you go to the Fed's website, they post the entire reading there. People use AI to identify any kind of changes in the verbiage from the previous reading. So then what's most important in that normal people can watch and react from is the question and answer session. So investors are going to wait for clues from Powell on the Fed's outlook on interest rates and inflation. So before an event like this, what I'll do is I'll go to the CME's Fed Watch tool and I'll just quickly write down July 4.7% chance that the swaps indicate that the Fed will cut rates, but really it's September at 77.1%. So if he says something crazy and that number drops to like a 50% chance, you probably know that gold and silver are going to react negatively. The dollar index will probably rise, 2-year treasury yields rise, and then duration will rise as well. All the foreign currencies will slip off. So you want to keep an eye on things like that. So at 8:30 p.m. Central Time, that's where another data point, and that's an actual data point you're going to want to watch here. And it's if you're laying in bed at 8:30, you could just turn on Bloomberg for 2 seconds. They cover the Asian session, and then you're going to want to look at gold, silver, and copper, where China will release its latest reading on inflation. The Chinese economy has been in a slump for like the better part of a year, and any kind of uptick in inflation, in economic activity, retail sales, anything that could drive the consumer would be welcomed as a precious metals investor. China's been in a terrible slump. If you look at their inflation, it's like the polar opposite. They're in a trough right now and they're starting to rise. They welcome inflation at the moment. So, and I really believe that you need 4 things really for a sustainable rally in the precious metals. You need a stagflationary environment. You need declining economic growth. You need sticky inflation. It keeps the Fed on its back foot. It's unable to raise rates while the economy's kind of like, dancing along, and then that inflation staying up like that. what'll happen is you get the Fed making its first cut, and that's where the afterburners come on and a commodity super cycle takes place. You also need a supply-demand imbalance. We've seen that in copper. We've seen that in the silver market. You need upward price momentum, which we had lost. We had gained it at one point. It kind of peaked out in May, and then right now we're starting the possibility of another upward price momentum. And then finally, you need that Chinese demand. Remember, China is one of the world's largest consumer of raw materials. Silver, 54% of the demand is industrial demand. So that's why I really believe you need China behind this, and I'll be paying closely attention to that Chinese number. So taking it to the charts here, the breakout point on gold, 2401. The close in support remains at the 50-day moving average, 2361.70. So you don't really want to see a close below that. And then obviously the line in the sand has been lifted. It was 2300. Before that it was 2285, then 2305. Now for me it's about 2315, 2316. We closed below there. It's just one punch to 2300 and below. Now the silver's done a lot better. It recaptured its bullish trend here. The first support is going to be the July 5th low, I think 30.45. For me, I'm going to be questioning it. Below that's the 50-day moving average, 29.90. And then the line in the sand is 29.21. The way that I approach these markets is generally from about a 1 to 5 day cycle. I relook at it. I relook at my levels and things like that just because it appeals to the way that I watch the markets. There are people that only watch silver once a month. There's people that watch silver and trade off it on a minute chart all day long. I witness it all day as well. So if you have any questions, give me a call, 312-858-7303. If you want to talk strategy, you want to talk about the performance of our funds, let me know. Again, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.